Check, check, check. How are we doing? Any of that coming through, guys? Can you let me know if you can hear me? Maybe a little bit of a technical bug this morning. Haven't had one for a while, so it was probably a little bit overdue. Boom, there we go. Big thank you to the ghost. Legend that he is in the background. So we're all good now, guys, right? You can hear that. I have no idea what that was, by the way. QBS just magicked his way into the back end and fixed it. But hopefully that's all right now. Nick, you're hearing the sound okay. Audio's okay now. We can hear BC. Actually, it was the ghost making the noise in the background, but shuffling away as he does. Sweet BC voice is working. Those dulcet tones. So I'm going to be even more efficient now because we didn't have any sound. What I was saying was going to keep this a little bit shorter today, this stream, right? So that we're going to be short, compact, punchy. If you've got anything you want me to look at, please do let me know. I will make a note of it and we will make time to run a top-down analysis on it. Now, I'm not going to get too news focused, but we can see, well, you can't really actually see it particularly well here. If we go to a 4-hour chart, yeah, we can just see here the effect of the Harris-Trump debate last night, right? There were no other news catalysts to move this. Yes, this might have just happened quite naturally, but I do think that this is the market's reaction to the fact that, you know, whether this be based in fact or not, a lot of the noise coming out of this is that Trump will be very good for the economy. He was previously, and that Harris won't, okay? And by all kind of, you know, speculation or reporting, or if you had a chance to watch it, what was quite clearly on display last night was the fact that this was either quite heavily set up to favor Harris last night, especially from what I'm reading and from the bias that exists from ABC Studios, which they seem to have come under a lot of fire for. But also the fact that they don't believe that she'll be particularly good for the economy, right? So I think this is the market's reaction to the fact that Trump really probably didn't come out ahead on those talks last night. So, you know, have we now had the news flush? What are we going into today? Well, something we really need to consider, ladies and gentlemen, is what we are walking into off the back of that, okay? And that is the core CPI month on month, yeah, dropping at 1:30 today my time. That's just under an hour and a half from now. That's 12:30 UTC. CPI month on month and CPI year on year. Okay, the projections are pretty flat, 0.2 before, 0.2 projected this time, 0.2, 0.2, but they have downgraded the forecast on CPI year on year, right? Now, obviously, they have a huge impact on the market if those figures are missed up or down. The market's in a little bit of a state of uncertainty at the moment, stronger economic data washing through. And before all of you viewers disappear, we will get back to crypto in a minute, but this stuff is important, I can assure you. As stronger economic data is washed through, the chances of a 50 basis point cut in the US at the next rate review has lessened quite substantially. The favouring and the weighting has now moved towards a 25 basis point cut, which could be considered neutral, almost a little bit hawkish, or you know, which is just another term for bearish, really, for the markets, because so much has been said about the expectation of this higher rate cut coming in, easing the pressure on people, but ultimately potentially flipping that pressure back onto the economy and having problems with inflation. All right, so please do be aware of that, especially if you're trading today. If you've got any positions open, about an hour and a half from now, expect a large injection of volatility into the market. Even if these run flat, I think we'll be okay. But obviously, the key thing that we've had today is that we're moving on, and we also have PPI tomorrow as well, right? So the key thing with this is that we're coming off the back of what is normally a very unscheduled or irregular high impact news event, which is, you know, Trump versus Harris on the live debate. So it's going to be very interesting to see what the markets do today, because I'm not just looking at this, you know, from the negative side, I'm looking at it from the positive side as well. I'm saying if we look here on the 4 hour, love the fact that we've come in and taken out this gap low, right? Low within a gap, bullish gap, supporting price at the moment. That's supporting the market. We'll do that in green so it stands out. I'm going to see this here. This was very, very important for me. This close above, this was a big bearish gap here. Excuse me. And look at it in terms of like support and resistance, right? We've got our support and resistance levels here. Now, what you'll notice here is as price comes here into support, we see this initial nice bounce. Yeah, that's why you've got really good swing traders out there, really good kind of intraday traders and stuff. You know, people like your SZs, your Danks, XO much more on a macro scale, even our very own Pitt as well, and Jay, the trading tank, a guy that I admire infinitely with his swing calls, right? They're going to be buyers at these kind of levels when you come in. Now, the key thing is you're then watching, okay, if you don't get that momentum, yeah, so you're saying to yourself, all right, where would you be wrong here? Well, quite simply, there was an point of invalidation previously. If you're going to go long here, you can place a long position on here, right? You place your stops under the invalidation point over here, and then you're playing this higher. Now, obviously, you will secure risk at a certain point here, for example, above this previous swing high where price came in, found support here, you then got that bounce, you enter your position, you're expecting higher, fine, price comes and stops you out. So at what point do you then think about re-entering here? Well, people will say, well, what about if you bounce again? Think about like a rubber ball, right? Now, as a rubber ball kind of comes into a level, you get that initial bounce, the initial bounce is good. Then you start to kind of see this losing momentum, right? And ultimately, it just kind of goes flat. Now, as terrible as those lines are, hopefully you kind of get the point here as we're coming into this support level, right? Look at the bounces. Look at the difference in the bounces here, yeah? This was a very sneaky move because price came in, you know, we had this big move above. We saw this initial bounce, secondary bounce, looks like it's going up. Happy days. Ultimately, price then sneakily ran these stops. We got the deviation. Price got back above, and then we went, right? But look at the difference here. And actually, let me do it with this so it stands out a bit more. Price reclaims this. Again, look, if this was going to sell off here, we've got underneath. You would expect when price got down to here for price to bounce here and reject further. That didn't happen. Price got back above, showing us that it had strength, yeah? So when price got above, look at the difference. The bounce, higher bounce, and a move higher, yeah? So when you see price have diminishing bounces, then in losing momentum, gets underneath, ultimately then sells off. Same can be said this way. Price reacts here, bounces, larger bounce, then we get these returns. Now, one of the things you probably hear me waffle on about a lot on this show, and especially if you remember with us over at the Nest, is how we can use these inversion gaps as an early stage indicator of price losing strength in this case, or, you know, losing weakness if you want, or losing strength to the downside here. So when you see these, what we're really looking for is you get your invalidation of the bullish buying pressure here because price comes up. We're looking for price to to find buyers in this gap and then push up. In fact, it violates it so aggressively, and in doing so, especially leaves a bearish gap in its wake, means that when we return here, we're ultimately looking for this to provide a signal in two respects. One, it holds and we reject lower, staying with the trend, or it violates, we close above it, like we did with this one here, in which case we're then looking for it to find strength and continuation. That's what we want to see from our green box here, right? This is just merely a gap. This is where price had, think of it this way. Whatever your kind of views on the market are, whether it's buyers, sellers, algorithms, etc. Algorithms definitely run these markets along with bots, etc. They have done for a long time. However, how that kind of reflects in price action is a point that we obviously, look to discuss all the time. But for me, ultimately, I'm saying, look, when you have this lack of order pairing here, because that's what causes our gap, so much buying pressure here that it's like that slippage. Everybody jumps on to buy at the same time and this thing shoots up. That's why liquidity rules the markets, right? Because if major players want to get involved here, what are they going to do? We're already in the uptrend here, right? So what's a major player going to do here? Say, okay, well, what I'll do is I'll put my stop loss under this last swing low. I'll try and enter here, but ultimately what happens is I'm going to target here. And my first entry is here because I've got a really good entry. But I'm entering with such size, or so many people with combined size enter the market that actually your entries very quickly go, oh, hang on, I've just bought and I'm buying into a market that's flying up so hard. I just can't get my orders paired quick enough, and your average entry position goes to somewhere like here. Then all of a sudden, what looks like a really good trade becomes a much riskier trade because you don't have the risk to reward element that you were looking at previously, okay? So when we're looking at that from liquidity principles, that's what we're looking for, in the same way that I'm looking for these gaps to provide strength. And if we violate them, close below them, then I expect that strength, in this case, support, to turn to resistance. Okay, so just to give you an overview on what we're looking for. So I'm going to get rid of this for a minute because we know that area is holding. While we're holding this gap, while we've taken liquidity from the low, this is going to tell us a lot. In my opinion, typically when we take liquidity from here, so we've taken liquidity from this low, then this bearish gap now would provide a very good draw on price. This thin line that you can see here is just a key support and resistance level for me. We can see as a point of resistance, underneath, back above, support, support, price sells up. When we revisit this area, what we do at these levels is very telling. The fact that we just sliced through this with, no questions asked, shows that the buyers just simply weren't there, right? However, when we reclaim this level, so we do it once, get back underneath, good manipulation move that to show this as a point of rejection, induce short bidder, people to come in with their shorts here all the way down into the bids that are lower. Once we reclaim this level, look what happens. We show strength back above it, retest, and we're up again. Same as we get here, holding this level, we push up. Ultimately, when you start getting back below these levels, you often then seek out the next key point of liquidity, be that support and resistance levels, or whether we're using our gaps as well to give us those early stage indications of strength becoming weakness or weakness becoming strength. So what does that mean? Well, it means on an intraday basis, I'm looking for, price to recover up towards this gap, right? Why is that? Well, quite simply, we've taken liquidity below the low. Price often likes to reprice in these gaps before moving lower. So we could either do that, or if we close above this, and I would need a same time frame close, so a 4-hour close, then I would look for this to hold here and trade up into the liquidity targets we have here, and ultimately back here, and ideally back within this range from a bullish perspective, right? We've got a lot of clear air here that we can trade up into. We've got a lot of these untapped swing highs here, leading all the way up into this slope liquidity pool here. However, we need a lot of things to align themselves in this respect, right? So in terms of that, there is a chance that Bitcoin kind of gets back in this range here between these two levels, where we can see it spent a relatively volatile amount of time, mostly recovering this level and then getting back above this level led to these nice pumps, okay? In the same way as when we've done this, when we've deviated this level and got back in, we've pretty much each time deviation climbed back in, revisited the highs here. Apart from this one, deviation here, got back in, and price ultimately rejected at this gap. So while we're holding this level still, and we've got this bearish sentiment going into today, people seeing the markets drop after we had, the debate last night, sure, this thing could sell off aggressively, but often the market likes to kind of move people to the wrong side before it takes that big move. So I'm actually looking for intraday long positions into this area here, and then to reassess when we're in here, because at the moment, we've set actually what is, in my opinion, I think it really is. It's a bullish candle, right? Bullish pin bar candle here. We see another pin bar candle here. That's not really, it's a doji because the nose is too long here, but a bullish pin bar here as well as here. Now, doesn't mean every time you see a bullish pin bar, you should just be rolling into the market and entering. Hey, Craigie boy. Sorry, mate. I didn't see you sneak in there. But it does mean that, look, it means that the sellers have tried to get price down here. That's what the attempt was, yeah? The bodies, and SC says this better than me, on the bodies tell you what price achieved. The wicks tell you what it tried to achieve, yeah? Like this. Body got all the way up here and then got all the way back down. So price has this nice recovery and everyone's like, brilliant, we're super bullish. But people kind of forget that when price got in this region before, it got a little bit of a spanking, right? Not to mention the fact that this is the area in here that led to this large sell-off. Okay, so if we're looking at that as a point of mitigation, you'd want to see this kind of area have an expansion above it and then give us, some bullish gaps, order blocks, etc., that we can look to tell us an early sign indication that the trend is looking to flip, or not the trend, because ultimately this, as we see on a 4-hour scale, is still bullish. Yeah, higher high, higher low. Yeah, however you read these charts. I know some people are looking for what's clear and obvious. Me personally, what I try and do is keep things super simple. So a swing low for me is simply a low flanked by 2 higher lows, and a swing high is a high that's flanked by 2 lower highs. Yeah, Very, very simple. However you look at this, it's still holding a mainly bullish structure here. Okay, there's an argument that this is a lower high and this is a lower low. So really, if we're looking for this to draw back into here, then the favored point is for price to reject a little bit lower. So with this candle, tried to force its way down into here, but actually got bought up quite aggressively back above this key SR level, which I have at 56,682. So, just drinking a lovely cup of English breakfast tea as well. Actually, a good friend of mine sent me a lovely little package turned up on my door yesterday, and within it were a load of little goodies for like cooking and chocolate and stuff like that. And yeah, it was one of them was the 2 beautiful boxes of this artisan breakfast tea, which I'm enjoying today. Anyway, I digress. So this is the target today. Why? Because I think price is drawing into this. Does this mean that I'm bullish? Not really. I'm actually quite neutral at the moment, especially going into the CPI print. But I do think we could draw into here and then reject. Close above this, and I think there's a good chance that we go for these relative equal highs here, and then our support, our resistance level, sorry, here at 58,727. So what alts are we going to look at? Does anybody have any suggestions or anything they would like to take a look at? If not, I am going to cover the DXY quickly. Now, we can see here, we've got the range set out here on the DXY. Now, expectation yesterday was to see this expansion towards the midline. We didn't quite get there. What's really interesting here is the losers from the Harris-Trump speech or debate last night. Somebody put, I can't remember who it was, some legend that I follow on X, might have been Macro CRG or someone else, but it hit the nail on the head for me. No, actually, it wasn't. It was Tyler, wasn't it? The ape derd and the absolute legend himself. I'm sure it was put on there that the real losers of the debate was America, right? And the reason that this shows this is if we look at risk markets here, right? So if we trade, funny enough, our AVAX trade from yesterday worked out really well. Some of our members got into a secondary short position on this as well last night and really kind of started to clear up. But let me just switch this to 2 screens for a minute because there's something that I find really interesting here. And that's that if we're looking at the DXY, and then we also take a look at, help if I did this, wouldn't it? So put DXY in here, and then we're going to take a look at Bitcoin as well. And we got them both on the 4-hour here. Quite interesting, isn't it, when you look at that price action? Yeah. Both reacting from highs up here, both seeing large sell-offs, right? You got this one here as well, which found support down here. Bearing in mind that was on Friday. Yeah, you can see here, Bitcoin coming in, finding support. Not quite in the midline, but like we always say, they're very rarely exact lines, right? They're more areas. So this was probably off just by a little bit. But ultimately, we had this pump here. Now, look how similar these look, right? And I think one of the really key things here is that if you look at what happened with the debate, yeah, you've got the dollar index, so that's showing a weakness in the dollar. That's a lack of faith, you know, in what ultimately is the world's major currency. And this shows the reflection here in risk as well, the major end of the scale in risk. If we wanted to look a little bit more in kind of like risk alignment, we would be looking here at the NASDAQ. And what we've said here with the NASDAQ is that that is holding beautifully at this support resistance level here, which is 18,575.5. It's actually kind of moving up quite nicely, but we can see this is due to the recovery here, right? And this is within the London trading session. We did see that sell-off here going in. Yeah, this was the debate sell-off. The dollar was hit a lot harder, yet we can see with risk markets improving, you can see that pressure coming onto the dollar. Yeah. So it's very, very interesting to kind of decant that across both pairs because you normally would consider the other, right? You know, people losing faith in that. people looking for a flight to safety, which normally means that dollar and bonds do really well. We can see if we look over here, the US 2s and 10s both down today as well. So showing that the appetite for risk might actually be picking up. So with that in mind, that could be quite good for Bitcoin, right? Now, we know that there's not exactly been a direct correlation with these, but it's more a case of looking at it as gauging the market's appetite for risk. Yeah, Sol and Sui. Yeah, of course, there'll be good ones to do, actually, guys. Let's take a look at Sol and Sui. Hans, my man, how the devil are you? All the way from the sunny South Africa, one of my favorite countries and just places to be. So without kind of jabbering your faces off anymore, let's take a look at Sol. Yeah, and we're just going to apply these same principles. Now, interestingly here with Sol, we can see that it's back below the midline. Again, came up here into the range highs and found quite an aggressive sell-off. However, looking at it in this respect as well, we can see that we continue to hold this nice bullish gap here. So for me, until we close below this on the 4 hour, if we close below it, I expect these lows. First of all, the range low to come into play. But beyond that as well, looking for these lows to start getting tagged as well. Now, we are back below the midline here. We can see what happened previously. We had this beautiful, strong close above it. Price came in, found support here, and almost pushed in perfectly here to the range high. Ultimately, we kind of found resistance, or not resistance, but price kind of took out this high here. Yeah, and then that's what led to the sell-off. Now, we can see we still have this level here, which tagged the range high perfectly. So as we see that here, price needs to recover this level here and then look to move up, all right? And that's, for the sake of all of us, hope it doesn't look as bad as my squiggly line does. FET looks very nice as well. Definitely, let's take a look at FET, Hands. If it's on your radar, mate, it is on mine. Just to kind of look at this on a lower time frame so that we can see, you know, price's reaction at these levels, right? Look what happens. You kind of have these strong reclaims, create these gaps, and then look at this here, right? This is just a really, really nice clean recap. Oh, hopefully TradingView is working a bit better with indicators today. That would be a nice touch. Look, big, strong expansion above. We got clear liquidity target here and here. Look how price comes into this level. You see that immediate reaction, right? You see that pump. For me, this is just an indication that buyers are stepping in here. Yes, sometimes this can be an absolute trap, right? Like, again, I wouldn't ever recommend longing here because you're just longing straight into resistance, right? But looking at the expansion here, quite simply, you know, you can draw a very simple line in the sand here with this box. This gap here, yeah, should tell you a lot because price coming in should be respecting these gaps, either leaving them and respecting the order block or repricing in them, buyer stepping in, moving higher. Ultimately, when you close below this here, this then turns to an inversion, which you'll see on my charts as purple, and then we look for this to provide resistance. Yeah, looking for it for support to push on and how it reacts because of the momentum that we created in this move, showing buying pressure here, buying pressure here, buying pressure here. We would expect price to reprice in here, or draw back in here, find the buyers and push on. Closing below is a sign of weakness and gives us an opportunity to then look for price seeking liquidity lower. And what you see are these beautifully presented, clean, untapped swing lows, which is a great draw for price. Now, looking at this in the opposite sense, right? I'm not saying that I would look to be shorting in here because we are in a large bullish gap, as we know on the 4 hour. But again, look at this. What happens? Price sees a very aggressive sell-off here. This is a level that support, right? Even as we look back, resistance here, support over here. This is a key level for price to look at and say, okay, if there's buyers still here, you would expect price to come in and, you know, at worst, like we saw here, price just kind of coming into this level here, maybe it kind of dips below, but ultimately holds here. And then that's where you can look to be a buyer, right? This is what we saw in here, right? Now, what you wouldn't expect to see here if you want to see strength is price just ripping below this and then coming in for a retest. That's your opportunity to short in here because you've got a very, very clear and obvious point of invalidation right now. Obviously, it's not a particularly great one if you're looking at a swing high because it's all the way up here. But ultimately, what you're saying is, you know, holding below here, this down here at 127.26 very much comes into play. So what do we want to see here? Well, quite simply, as long as we kind of continue to hold here and we're continuing to push down, then we are looking bearish, right? But get back above the midline here, show some support, and remembering to overlay our time frame, yeah, well, quite simply, price could completely recover this whole move in the next 30 minutes for all we know, close back above here, and then this is just a long tail wick that are just beautifully designed to induce people in this game late to short positions, to take some liquidity, reverse with all that pre-made liquidity to fill their bags to whatever level they want to, and then sell back to the market higher up, right? So as we are here with Sol, something I do want to do, I just want to zoom out kind of to a daily scale here. Always good to look at the daily for context. Now, one of the things that makes me feel, I wouldn't say bullish, but makes me feel like this could be a recovery here, is that these large down close candles here, my focus really being on this one, because this one here, this one is within the range of this. Yeah, so the body is what I'm focused on. Now we had this close here. Right, this is just the black line. Price closed back above this here, which to me is a real kind of a sign of strength, because if we're in a downtrend, yeah, then we are looking for the up close candles to provide resistance like this. Yeah, retest, sells off. If we're in an uptrend, if we're feeling bullish, then we're looking for the down close candles to be closed above, like with this. Then our expectation is for price to seek liquidity higher. In this case, it was the range high, but typically I'm looking for swing highs and swing lows for price to get to. So what does that mean at the moment? Well, it means it's a little bit confusing in truth on a daily scale. If we really kind of zoom out and squidge everything up and get rid of all the drawings for a second, then looking at this from a point of market structure, we can see it's a little bit messy here, right? But ultimately it is bearish. Lower low, lower high, higher low, but a lower high again now, and now we're back to a lower low. You know, technically we really need to come in and reclaim this level, which is up at around about 162.2, before we're reclaiming bullish market structure on the daily. However, you know, as we all know, it's one of those things with market structure, especially on the higher time frames. So here, for example, hello, Whack, mate, and Duncan, very kind of you, mate. You are always very, very welcome. Just reminded myself that I can't do that with these off. But this low here, higher high, higher low, lower high, takes out the lower low. So at that point, you know you're bearish, but actually on a daily scale, you've already missed the majority of that move. That's why we look to finesse these things using, say, like a 4-hour chart, right? Now, again, depends what kind of time frame trader you are. But for me, I use the 4-hour a lot. I find it's a really, really clean time frame for me as an intraday trader. Let me just get rid of the session breaks for a moment so that's a bit clearer for you all. So in terms of this, you could argue really that price is kind of just ranging here. What we will need to do to show that, though, is we need to just grab these bits here, and then we can create a group. And then we can hide that group. And then that way, if we draw on here and the drawings come back, well, we just click that. Then we can just get rid of those as well. So in terms of just kind of squishing the chart up, just something you see SC do incredibly well, right? And it's because we're looking for these kind of key points of confluence, looking for these areas that were resistance that have now turned support. But we're also looking for ranges. And whenever you're in a large sell-off like this, for me, what I'm looking for is a kind of a bounce range or an impulse range. When you've got a large impulse drop like this, I'm looking for price to set a low and then set a new high. Okay, so in this case, price came down, set a low, didn't set a new high, set a low, but here set a new high by taking out this. So something you can do here is look to the bottom of that, to the top of the expansion range here, and say, okay, this gives us an indication here that price is ranging. All right, if we then move that down to a lower time frame, compress the charts in, we can see here price sells off, deviation, gets back in the range, retest up to the midline. Now price holds here on the mid, but actually what we would do typically is you would split that. So you can just get a Fibonacci here and do this. And then you can just either draw in your own midline here, for example. And then you can see the effect that that has on price here. And then you can do exactly the same with the bottom half. And then you have two really clear identifiable ranges, right? And then typically what I would do is just kind of put this one in a solid color here as well, just so that it doesn't get too confusing. So now when we look at it like this, we can see actually, hang on, price has come into an area where it's found key support. What's happened here? We've closed underneath this now, underside retest. So like with any range trading, what are we looking to do? Well, we're looking for this to be one of two things: confirmation that we're heading for this level, in which case this is where you want to be a seller. Yeah, hard point of invalidation here, I appreciate, but ultimately that's the level, because you're saying, look, price is most likely to then push on down here towards the mid, and here we either recover the mid and move higher, or we get back underneath the mid, retest it, and ultimately move lower. So that's the way that we're looking at our ranges. So by breaking it down like this, the only other option is, well, is this just a large deviation? If it is, price gets back above, yeah, then we look for this area to hold, and same as before, we then target the midline, and from the midline we then look for range high to be established. So this was a good example actually of a failure of this, because price came up, big expansion, and left this failure swing here. Expectation was for it to take out this high. Price then made its way back down to here, but look, can you just see that you're not getting, as we discussed before, that impulse, right? Gordon, hello, mate, from Bedford. Good lad. Good to have you back with us. So we've come into here. You can look for a structure break even, right? So for example, price rejects at the midline here, right? So price sets that low, the high. So you can look for example, intraday shorts below this. Price has broken down, respecting bearish structure. You've got a pre-made target. Or in the reversal of this, you could look for something like this. Here's the highs, price sweeps liquidity. This impulse move higher means that I'm fairly confident that if I'm a buyer here, price is going to seek liquidity back at the midline, all right? And then if I'm wrong, so let's say this one, for example, let's say we got cocky and we got in this early, we see price come down here, then it sets the high. What I would want to do here is look at this, and actually this is very tempting because they're equal highs as well, for price to retest this level, expand above it here, hold this, and then move up. Ultimately, we don't. If we apply the same principles lower and look for that structure shift below, fine. We didn't really get the opportunity to get in here because the move was so fast. But that's the kind of principle here. So if we look at that and we overlay that with where we are, quite simply on Sol today, if this is anything other than a manipulation higher, then the expectation is, if price starts taking out this high, we've taken liquidity below this low, we're forming our way back into a bullish structure. We want to see this hold first, then we want to see price reclaim this level here. If we want to be super safe, this is where we look for our pattern of a sweep, a reclaim, and then we look to trade it higher. Yeah. Or you're somebody that likes to take the trades at the extremes. If you've got a swing low here, that's where you're wrong. Below that, your entry is here, and that's your target. And you could even look to secure some stop losses around there, some relative equal highs, all right? So that's the kind of thought process on Sol. I think we've had this kind of, we've sold off. We kind of come down into this range that we can see here. We've got some really, really clean levels to trade. Now, also the opposite for this, right? This could very well be that price is now coming up to take liquidity above this. Yeah. Could do something like this. If it then does that and then gets back below here, well, then quite simply, you've got, a pre-made recipe telling you that price is seeking out some form of key liquidity. Could be in this untapped low here, obviously without that line, this untapped low here, or it could be at the range mid. Either way, what we're doing is we're looking for just key reactions at key levels rather than just trying to, I don't want to take a position here, because it's kind of 50-50. If it works, great, then I get a decent, maybe a 1-to-1 risk to reward. If it sells off, I lose one. I'd rather be a buyer, establishing ourselves above here and get a 2-3 hour trade into here with the ability to secure my stops and step away and mitigate my risk, or be an early stage seller here or an early stage buyer here. Okay. Now we're just going to apply these principles to 2 more charts, and then we're going to call it a day. Okay. So we're going to do this first of all on SUI. That is the Binance charts, isn't it? Let's have a look. Okay. Here we go. So again, just very, very, very super simple support and resistance level here. with our range of suing. Like we're saying, reclaim, looking to be a buyer here, looking to be a buyer here. A rejection in here, we'll see on the lower time frames. I think we were reacting to an hourly or a 15-minute gap. We're looking for strength. But ultimately, when you look at these levels, look, deviation, reclaim, finds strength, sells up to here. Deviation comes back underneath, sells off. Not quite to range mid, but then look at that move afterwards. These moves can often be this manipulation, baiting people into going short, squeezing them really hard and ripping the market the other way. So deviation up here and then a sell-off lower as well. And sorry, Gordon, I didn't see that, mate. Yeah, absolutely. All recorded, my friend. So please feel free to reach out if you've got any questions. So you get the basic principles of the range, right? So where are we with this? Well, at the moment, we've just kind of slid below this. All right. Now, I wouldn't call this, a perfect close and retest, because you really want to see some longer upside wicks here. Well, I do anyway. We see something like that here or something like that here, and then a fuller body on this one down, I'd be thinking this is more of a retest. At the moment, I'm feeling like this gap here, which price has just tweaked into, has been the draw. So if we're really starting to see price break down here, then quite simply that really, which is almost perfectly the midline of this range, looks like the nearest and most obvious target. When you see something like this, right, look at the full body candle here, tiny wick at the top. Now, when you have that kind of expansion, we just changed the state of delivery here. We set this small order block there. When you see this here, you can then look to be a buyer in here, right, and look for that expansion. Ultimately, I don't think that looks this clean at the moment, right? So my current thought process is this, that we have this 4-hour gap here. It's bearish. That's forcing price down into here. I don't really want to be a seller here. I'm not convinced that this is the kind of underside move and the retest, because if price really did just tickle into this, I would expect the sell-off to be very aggressive, because typically how we respond at gaps, just trying to find you an example here. Okay, this is a bullish gap. So price comes into this, look at the immediate reaction, sells up aggressively, yeah? See how it just tickles into that gap and then boom, the reaction's aggressive, because the only reason it's not getting deep into that gap is because there's lots of buyers there that want to take a slice of that action and then take it higher. Same as this one here, price breaks back down again, rebalances the rest of this gap, and then the reaction is pretty immediate. So here, price tickling into this here, dropped and then immediately got bought up. I'm really not so sure. I just think that I want a bit more context on this. So this is where I move to the lower time frames and say, okay, maybe price is drawing higher into this gap. So what can I do as a mechanism to work out if that's going to happen? Well, again, back to our gaps, right? If this really is weak and then price is respecting these bearish gaps, so sells off, bearish gap, then we should be looking for price to take out liquidity lower down here, and ultimately this low here as well. But I think this is the key low. So we close above and violate this. I think price is making another move on these highs. Untapped high, untapped high, untapped high, untapped high. And on a 4-hour scale, drawing higher up into this gap. So looking at this again and saying, okay, well, here we've got NQ, but I just want to take a look at the dollar index again as well to see if we're finding any kind of resurgence here. Again, this is never going to be perfect, right? So just because we're showing strength or weakness here doesn't mean that we're going to show the opposite over here. But I am looking at the dollar to see, what's the market's appetite for risk here? Is there any aggressive pumps going on the dollar or aggressive dumps, in which case we can counteract that with how we expect Bitcoin and other risk assets to behave. The fact that the dollar's down today, that the NASDAQ is down as well, the S&P 500, so the basket of risk assets pretty much is down, as is the DXY, as are the US 2s and 10s, paint the picture of a fairly confused market. And a big reason for that is because we're going into the CPI print in about 45 minutes. So I'm going to be looking at how price reacts there. But setting that aside, because obviously you don't have this high impact news every day, but I would recommend, just go across onto our website, by the way. You can find all of the economic calendar shared for free on there. You can search out all of those details. We've got free crypto screeners on there. You can see what the strongest, weakest coins are, how many are above their 200, their 50, and their 20 simple moving averages, bits and pieces like that. But ultimately, while we're in here and we're holding below this level and we're holding a bearish gap on the 15 intraday, we're favoring short. Everything tells us that market structure's bearish, etc. But I would be waiting for the CPI print on this on a slightly higher time frame basis. Back to our 4 hour. Realistically, I want to see a close above this, and then I think that 1.0093 comes back into play here. Again, while we hold below this, anything really starts to stutter and hang too long below, we want to sell that off. If we do that, and let's say we enter some short position, we get stopped out, price gets back above here, then I'm much more convinced that we're going higher, right? Because look, same as this, price breaks down here, but very quickly gets above, retests, go to the midline, comes back down here. That's why we don't want to just be like, oh, price is breaking down, we're selling, because look what happens when it got underneath. We put these dots on here to show that we want to be buyers in these areas, right? We're playing into the strength and into the market structure. At the moment, we need to see a bit of a recovery here on SGY, in my opinion, before we can start to go higher. However, a really good CPI print could really kind of inject some volatility in a bullish nature into the market. A bad print could, obviously do the opposite. So we're going to finish up here on FET. Just some old TA here again, just looking at kind of key levels that we've got that we want to hold. Back above this level, we expect to push up to the next key liquidity, hold above this level. We expect price to push up to the next key liquidity here, hold above this level, so on and so forth, right? And now, and this is a good exercise as well for anybody that's interested, right? And look at these key swing highs and lows. Look at all of these, how they're very well defined with long upside wicks, the same way as we would look at any that had long defined downside wicks as well, okay? So as we looked at this here, closing below this here gave us the indication that price was needing liquidity lower. We get this retest here, price sells off, deviates back above, gets underneath, and then has the real sell-off lower. So that's what we're looking at over here, right? Doing the same with these key levels. It was this wick higher here. We had the same thing with this wick higher. Look at how price reacts. How when it's moving into it, let me just hide this stuff for a minute, see if I can do that without. There we go. Price closes above. This is what I'm talking about when I say a strong close. When I say a strong close, I mean a full-bodied candle. You don't want to see a close come up and have this huge wick, yeah? Like you want to see price close above a key level and hold that level. Then you're coming into here. Look how price respects that. We then get price close above this level. Look how this is respected. Fine, it's not retested, but this bullish gap is respected as price dips into it and finds higher. Strong close again, respected here. Price moves up to this. So for me, now we're in this kind of corrective move lower. We could very easily just be testing this order block. At the moment, price seems to be doing a pretty decent job here on FET. FET community are super active, great team behind them. I think my friend Just Pit posted a really good chart with them the other day. They've got a really good breakout going on. If anything can find strength in this market at the moment and align itself with a good narrative, that's what's going to push these things higher, right? So I'm actually a little bit bullish on this on the 4 hour. I think if the caveat to that is we need Bitcoin to behave, yeah. And still, I know the line in the sand for me. This is the line I want to see price above, because all of these other key highs on FET, when we have those strong closes, hold as support and price moves up. If we start getting back below them, that's when we can kind of turn around and say, okay, maybe we're now really shifting. But I don't think that's the time here on this. So just to look at it on a 15-minute, look what I was saying earlier about price respecting bullish gaps. So that's holding the market here. As we look for these inversion gaps, that's bearish gaps turned bullish gaps here, for this area to hold. And we have this other one here as well. So quite simply, this should be like a real bastion of support here. Price should be able to draw down into this, find all the support it needs, and really push up. Ultimately, if it comes back below and we get back below this area here, yeah, the bottom of this gap, which is sat roughly at 1.290, then I think that's the time to be looking to get into short positions and trade this into liquidity resting lower down. But I quite like FET here. It's just, as everything is, just at the mercy of Bitcoin. Well, brilliant. I bet she needs a good handle on you, Hans. You're an absolute grafter, mate, but I can imagine that you were quite a lad in your day as well. Also on the 15-minute here, it's worth noting that, look, lower low, lower high, higher low, higher high. So again, if we can hold this kind of area here, maybe price is just looking to kind of dip in to this 15-minute bullish gap here, aligned with our inversion gap. So this should be, you know, support overlaid on support, which just means that we can look for lower time frame long positions here intraday, and we can play them very close to our chest. I would not enter them now, by the way, not this close to CPI. Or we wait for these areas to fail us, in which case we can then look lower. Well, I hope to find out one day, mate, when we're sinking those cold ones on a nice beach in South Africa, talking charts. Right, legends, I'm going to call it a day there. We're just about to kick off our live trading show over at the Bird Nest. If you guys would like any more information on that, let me show you a little picture that I'm quite proud of, actually. Very rarely do this, but our trade club, which is just a small part of what we offer over at the Bird Nest. We're trying to get to 100R for the year. We started in March. We're up at 50. We're actually a bit more than that now. So we had a decent win yesterday, actually, on AVAX, which is the community. We did really well, got together. Everybody shares their opinions, their ideas, whether we're going to trade crypto or traditional markets. We work together to find the assets that we want to trade in that, and then we live trade them Tuesday to Thursday afternoons during the New York AM session. And I think we're about 54.3 are up now, okay? So that's where we are for the year. We've got a big target of 100R by the end of the year. Please do come along and join us if you are interested in that. You can find all the information for all of this down in the description as well. We've got some great offers going on at the moment. Memberships start from free. Even the main paid all access memberships have now been reduced very, very heavily in order to get more people involved. You have access to courses, whether you want to learn how to trade, you know, build algorithmic trading systems. You can learn price action with me and some of the rest of our amazing team and trading crew that we've got over there, as well as access to, in my opinion, just one of the very best communities and membership bases in the space. All right. But that's it for me today, guys. I won't be with you next week, not at the regular times anyway, because I'm going to be traveling out to Dubai tomorrow, actually fly out to Dubai for a few days to meet with some of our partners out there with Binance and Bybit. And then I'm flying on to Token 2049, where I'm going to meet up with the legend himself, Crypto Burb, as well as a ton of other great people that we've got going. I've just found out that my dear friend, my boy, Trader Dank is coming out as well. That is going to be an absolute blast. And so many others. Quintin's going to be out there, Quentin Francois. You know, just honestly, guys, take a look. If you're out and about over there, please do hit me up. Would love to kind of organize some kind of meet up with all of you awesome people if you're around there. And if not, then I will be doing as much live stuff as I can over there. Just need to kind of get over there, touch down, and find out how we can plug ourselves into a schedule. All right. If you haven't got me, you are going to have one of my amazing team. You'll have either Razoon on the coming in for you as well, doing things and teaching a little bit more about volume and TPO, or you will have Jimmy coming in sharing his psychological wisdoms with you too. Okay, as well as the fact that he is a sick little trader. He really is. All right, guys. So look, thank you so much for joining us, as you always do. It really, really is appreciated. Yeah, thank you, Hans, and everyone else. We will have a lot of fun over there. For a change from me, I'm a big advocate. I travel to Africa as much as I can. I love the kind of wild coast and the wild nature of it. Actually traveling to a really, really safe place there in terms of Dubai and Singapore. Almost couldn't be willing or wishing to travel to safer areas, but really looking forward to embracing the culture over there. I love Asia, and I've never spent a lot of time in Singapore. So do please shill me any suggestions you have. I'm not sure we're going to have much time to do much social, but if we do, I will absolutely organize some kind of event where we can all meet up. So come and reach out to us at the Nest, or by all means, please come and reach out to me at Twitter at BC_Richfield. All right, everyone, have a fantastic day ahead. Please do be aware of the news dropping very, very soon. Hey, Simon, very welcome, mate. And PPI tomorrow as well. All right. I will be in touch as much as I can. Please do keep an eye on my socials. I'll try and keep you all updated with the travel and all the fun and the work that we're doing over in Dubai and Singapore. Take care, guys.